Hi guys, hope you're doing well. This is the first presentation I'm going to give you over the video. I'm going to be talking a little bit about what the financial manager does and the different strategies for financial management. These are all in the part of the first presentation. So, what does the finance manager do? The finance manager is tasked with determining the best way to repay the borrowed funds that the company needed in order to survive and grow. So that's the first thing that they have to do. The second thing is to make sure that all those obligations are met on time, meaning that the company repays what they have borrowed in time and adequately, so that that does not impact the company's financial statements as well as their reputation and their brand name. And on top of that, they need to make sure that the company has enough funds to carry out the daily operations of the company. So that has to do also with what financial management means. And financial management involves mainly three functions. Those are capital budgeting, capital structure, and working capital management. So what does each of those mean? Capital budgeting is the function where the company, or actually the officers of the company, think about what the long-term projects are going to be for the company. And these could include anything that has to do with the business mission, their strategies, etc. So it could be opening a new line of business, closing a line of business that is not being profitable, opening branches, investing in another company. So all those are activities that have to do with planning how they're going to use their capital and their capital resources. Once the company decides on that, then they need to think about how are we going to fund those things. And that has to do with capital structure. So meaning how are they going to structure the needs for funds that they will need for those activities or for those projects. So does it mean that the owner or owners are going to invest in the company, that is through a stock? Or are they going to require a long-term loan? Or they need to sell bonds so that they get money in return for interest to third parties? So everything that has to do with how they're going to finance and fund long-term initiatives have to do with capital structure. The third function in financial management has to do with managing the working capital. And what's the working capital? That's more of the short-term, day-to-day funding and financing that they need to do for day-to-day operations. So that has to do with the amount of current assets that they have and the amount of current liabilities that they have. So do they have enough cash? Do they have enough inventory for, let's say, the next 30 days or the next week? So those are decisions more on a short-term basis that ultimately are aligned with the long-term vision that the company has and the long-term vision of the business they want to get in and fund. But again, working capital management is just day-to-day operations. Okay, so are we getting a short-term loan from a bank, from from a third party, etc. Any questions on that we can review in class next week.